Good afternoon, everyone. It's Allie Corbin-Shreve here with a breakdown of the action for Thursday, December 28th, where we saw a little bit of a sleepy day, quiet action as the new year is upon us here shortly. Just one more trading left of the year to go. I can't believe it, Ken, but it looks like stocks are still very much in rally mode.
Yeah, we've really just been kind of a holding pattern, low volume period for the market. You mentioned one more trading day left in 2023. Pretty amazing. Still have a lot of stocks out there acting well. Want to take a look at two stocks in the red hot enterprise software group, Freshworks, which is ticker FRSH, and also UiPath, PATH, and finally, a Chinese listed stock that just is really, showing characteristics of a stock market leader. That's going to be PDD.
Okay, we'll take a look at those three stocks, but first, let's analyze the major indexes. So the Nasdaq down just fractionally today, 4 points. The S&P 500 up fractionally, about 2 points. The Dow up 0.1% today, and then on the small cap side, the Russell 2000 down some 0.4%. But if you take a look at the daily or even weekly chart of the Nasdaq, the S&P 500, and the Dow, it does still seem like all systems are go.
Yeah, no doubt about it. It's been a tremendous rally from the from the early November, late October, early November lows. Listen, we've been talking about a market that might be starting to look a little bit frothy. We've run up a lot without much consolidation, but again, we're in this low interest rate environment with the with the U.S. Dollar still on a downtrend here. So I think the only thing that would change this narrative, you just have to think of what scenario would result in higher interest rates at the start of the year, and that's just kind of tough to envision now. We've seen economic data that is pointing towards an economy that's chugging along here, but I suppose if we start to get really red hot economic data and inflation stays elevated, that could be an issue. But I don't know. It really seems to be looking strong here, and we've just been talking a lot about the action in a lot of market leading stocks out there. Very positive.
Exactly. Yeah. Because as we're still edging higher here above all of those shorter term moving averages, stocks that have really been those explosive leaders out of the gate in November and December, it seems like they're holding firm. They're not yet really wanting to give back gains. Of course, we always take things one day at a time. And I know, Ken, you're keeping a very close watch on how those leaders are acting. Maybe if it's some tax selling as the new year is just right around the corner, or what are you seeing in terms of from a technical perspective? Yes, we're extended. We could be due for some sort of pause or pullback, but better to just wait and see if and when that happens than try to predict too much.
Yeah, I mean, November was such a strong month for the stock market, and December's been pretty good as well. But we've been talking on IBD Live that a lot of people are probably sitting on some nice winners this year, and taking a little bit of money off the table, and maybe trimming some of your big winners, and taking some partial profits makes perfect sense here. So nothing wrong with taking gains in the stock market, and again, we'll have to see what January holds. January has been a rocky month from time to time in the past. Historically, it's I think I saw over the past 10 years or 10 statistic on the S&P 500, past 10 years, it's up it's up half of the time. So half the time it's up, half the time it's down. So we'll have to see. But again, this Fed meeting earlier this month, I mean, it was a legitimate pivot where Jerome Powell signaled some rate cuts next year, and they're probably going to start as early as March. So that tends to be good news for the stock market, tends to be good news for corporate earnings. So we'll stay optimistic that this uptrend is going to continue into 2024, but also recognize that it's an extended market, not only in terms of the major indexes and where they are in relation to their 50-day moving averages, but also a lot of leading stocks have just run straight up without much consolidation.
Exactly. And the Nasdaq right now is about 7.8% above the 50-day line. It looks like before the July pullback, we closed 8.2% above the 50-day line, and in June, 10.1% above the 50-day line. And let's look at the S&P 500. 6.5% above the 50-day. Let's see, roughly. I mean, we don't know on this reversal day, but around the highs, let's see, where were we? About 5%, and then looking back, about 6%. So starting to get to those elevated levels.
Yeah, it's interesting also to look at the volume on the NYSE, at least when looking at the S&P 500 index. You had that violent reversal where you saw very heavy volume, right there. And then since then, the index has been rising in pretty light volume and touching some new 52-week highs here. So that's another just thing to keep an eye on here. Again, it's way too early to get bearish on this market. It is important to recognize overbought conditions and extended stocks, but it doesn't mean that you just sell everything and move to the sidelines. Again, taking a little bit of profits here, and seems like good strategy while maintaining some exposure.
Okay. Next on the list, let's take a look at the Dow continuing its climb higher. And in this run, not even coming down to touch its 10-day moving average just yet. But that's also a pretty sharp ascent here. Ken, it seems like the market breadth is continuing to hold up here.
Yeah, no doubt about it. 2023 was at least for a good part of the year, was the year of the magnificent seven stocks. A lot of these large cap technology leaders, but then starting and really in October, November, you really started to see the financials, start to participate. XLF has made a nice rally here. Some of these regional banking ETFs as well, KRE, really acting well here. So, the home builders, have been a tremendous pocket of strength. And I would say that, if there are concerns about a slowdown for the economy next year, I don't think that you would see this home builder ETF trading like it is. It just seems to be pricing in pretty good times in 2024. Again, that could change, but with the home builders acting so well, that seems to certainly be a vote of confidence in the health of the economy next year.
It does appear that way. Okay, let's take a look at some notable names, including Freshworks. FRSH is the ticker here. We saw a breakout mid-month, and it's been holding up nicely ever since, Ken.
Yeah, and this was not an earnings breakout when it moved above that that handle buy point right there. But really like the way that volume was very heavy as it broke out, and then over the past week, maybe a little more than a week, you've seen volume really dry up as it drifts lower here and holds support at the 10-day moving average. So Freshworks, maybe not a widely known name in the enterprise software group, but they provide cloud-based tools for customer relationship management and also IT automation. So if we go to the weekly chart, you're going to see big increases in fund ownership here in recent quarters. That's a positive. You've got a pretty good record of earnings and revenue growth in recent quarters, particularly on the earnings side. You can see the adjusted profit for 4 straight quarters, reversing year-ago losses. So a lot of positive things to like here. And we've been talking about these stocks trading tightly after big moves, and here's another example of what tight weekly closes look like on a weekly chart here, and it's just a sign of strength and support, and could presage higher prices. But we'll need the market to keep acting well here.
Let's also take a look at Path. This is another enterprise software stock working on a couple of tight closes on its own. Now, early in the month, we did see an explosive move on earnings for this stock, and it hit a little bit of resistance at first at that 25 level. It's now above it, living above that number here, Ken. What do you think about this stock?
Yeah, and you see the relative strength line kind of moving sideways, but holding near highs. Looking pretty good here. This is an interesting company, robotic processing automation software that basically helps customers automate repetitive tasks, things like that. So, kind of an artificial intelligence play here for sure. But another stock that is really showing strength and support after a bullish earnings move here. So again, the weekly chart, we're seeing just a lot of technical setups like this. Here's another example. That had that huge earnings move, and now you've got some tight weekly closes here. So yet another stock that is showing strength and support. That 30 is that 36% or 38%? I can't quite get.
36.
36%. Yeah, that 36% number means that the stock gained at least 20% from the buy point in less than 3 weeks, and that sometimes can tell you have potentially a big leader on your hands. So you want to kind of try to sit through any pullback here and give this stock as much room as possible to work, because it was such a powerful breakout. But another example of a stock just trading tightly, showing tight weekly closes, and tells me that it still has the potential to be a leader here.
Exactly. And I feel like this is another signal of that widening out of leadership and breadth, because there were so many stocks like this in the enterprise software group that were just so beaten down and really were having a hard time recovering, while we saw those mega cap names, as you mentioned, leading for a lot of the year. But now we're seeing more of these smaller stocks, more of the high octane names with the triple digit growth that are starting to participate and look strong as well.
Yeah, and Path, it was really a sharp drop in 2021. You can see part of the weekly chart, showing that drop here. So obviously the stock put in a bottom and consolidated and is starting to move with some volume. So again, you've got pretty good fundamentals here. It's another stock that's got great fund ownership. So that's something important that we like to see. Look at the end of 22, there were almost 400 funds in that stock. That number's jumped all the way up to 652 3 quarters later. So rising fund ownership is always good to see.
It sure is. And now let's go to PDD out of China, a retail internet name there. And this is clearly the China leader right now, Ken. You've said it yourself, and it really shows up in this chart.
Yeah, I mean, I cover Alibaba, and it's just like two totally different growth stories here. Alibaba is stuck on a sharp downtrend. They're in the same business, and I think PDD's market cap recently exceeded that of
Oh, wow.
Alibaba's. Yeah, but they're pretty close, I think.
Let's see.
Um,
So,
213 billion.
yeah, you are right.
Yeah, just
That's
so it did surpass Alibaba's market cap. I mean, both Alibaba and PDD are just you know uh, e-commerce juggernauts in the country, and there's been a lot of regulation, and China stepping in and trying to, particularly with Alibaba, but PDD has managed to sidestep a lot of this regulatory scrutiny. But another stock that would like to see it form a base here. It could move sideways or maybe come down if the market pulls back. Maybe this will come down and test its 10-week moving average, the red line there, and give an opportunity to buy the stock. But look at the fundamentals here. Look at the revenue growth. It's not easy to find companies where the rate of growth is accelerating. So with PDD, it goes from 35 to 46 to 54 to 89%. You can see why that move was so explosive a few weeks ago. So great fundamentals, great earnings estimates, and clearly the standout performer in China right now.
It sure is. All right, Ken, thank you so much for your insights today, as always. And thanks everyone for tuning in. That is it from us. But be sure to tune in tomorrow morning on IBD Live, where Charles Harris, portfolio manager at O'Neill Global Advisors, is going to help us wrap up the year and look ahead on IBD Live. So we're looking forward to that. Investors.com/IBD Live for all the details on that. We'll see you 10 minutes before the opening bell. And we'll also see you right back here tomorrow at the close for our wrap up of the year. Can't believe it. It's been quite a year, hasn't it, Ken?
Unbelievable. Yeah, time is going by quickly these days, but yeah, it sure is fun covering the market.
It sure is. All right. Well, we'll see you tomorrow, everyone.